Time for our business now. Charles Pellegrin is with me here on set. We're going to head to Senegal. The focus on the economic challenges awaiting the new president there. What can we expect then from Bassirou Diomaye Faye's presidency?
Well, the former tax inspector is seen as an anti-establishment candidate with support from the country's youth, who are really yearning for more opportunities and less inequality. The major issue the country is facing, obviously, is a 20% unemployment rate, which is fueling mass emigration. His platform seeks to change this. He's campaigned on the promise to lower the cost of living, especially for basic necessities like rice or electricity. He's previously said he wants to leave the regional currency, the CFA franc, which is pegged to the euro and often seen as a legacy of French colonial rule. But he has said he'll seek reform of the system first. He's hoping to bring in more revenue to the country as well by renegotiating oil and gas contracts, which will then allow for further investments, whether it's into agriculture and social services like education.
Yeah, it seems as though these oil and gas contracts, they're really key to his program here, Charles.
A few years ago, international energy groups, BP, Woodside Energy Group, and Cosmos Energy agreed to develop oil and gas fields off Senegal's coast with high hopes. As you can see here, the IMF is forecasting that with production expected to start later this year, growth could surge into double-digit territory next year at just over 10%. This has the potential of increasing access to electricity in the country, but the projects have run into delays over diverging interests. BP, for instance, pulled out of one project over disagreements with Dakar, the energy giant aiming to use production for the export market, while Senegal wanted to use the oil and gas for their own domestic usage. But without BP's expertise, it's unclear whether Senegal has the know-how and financial ability to really fully benefit from its own resources.
Okay, quick look at the markets for us then, Charles.
Yeah, absolutely. In Europe at the Open, we're seeing a positive picture on the major bourses. This is the first day of a new quarter of trading, as Monday was a holiday. And actually, the first quarter of the year ended last Thursday with European shares up 6.8% higher. And it's looking like it's starting the second quarter on a positive momentum as well. You can see the FTSE in London up almost 0.5% higher at the Open.
Now we're going to take you to California for this next story. Fast food workers there are now some of the best paid in the US.
The state's minimum wage for the sector rose to $20 per hour this week as a new law aimed at boosting financial security for the industry's employees took effect. While workers are hailing the raise, employers are warning of price hikes and job losses. Brian Quinn has a story.
In the state where McDonald's was born, good news for fast food workers. Their minimum wage has now gone up to $20 per hour in California, a 25% raise over the statewide minimum wage of $16 per hour.
It's my only income, so it will help a lot. It will increase the family budget.
U.S. fast food workers have traditionally been low paid amid the widespread impression that most are teenagers seeking extra spending money. In fact, more than half are over 25, and a quarter are their family's primary earners in what is one of America's most expensive states to live.
Many will say, wow, $20. Yes, but today in California, we all know that $20 an hour is still not enough to pay rent. I pay more than $2,200 a month to rent my one-bedroom apartment.
Employers aren't happy. McDonald's, Chipotle, and Jack in the Box have already said they will be raising menu prices in California. McDonald's franchisees have estimated hundreds of thousands of dollars in extra labor costs each year, with some warning of layoffs. But the industry has added more than 140,000 jobs since the state's minimum wage began rising some 9 years ago, recording record profits since 2018.
Employers have had it very good. Profits are high in the industry, and so there's also room for them to absorb the wage increases.
The new law applies to restaurants that have more than 60 locations nationwide without table service. The U.S. federal minimum wage is just $7.25 an hour.
That's it for the business news so far.
Charles, thanks very much. Charles Pellegrin with the business.